But overall, we are looking at a market that is implied to open up significantly higher. And this is after a pretty decent trading day yesterday as well. And we are unclenched in this post OPEX environment. So we're unclenched from that gamma exposure. I got some folks saying good morning to me, so I'm just going to quickly reply back to them because it would be rude not to say that, right? And good morning to everyone out there listening, watching. Appreciate you all. I know there's a lot of crazy stuff going on in the world right now. I feel bad for the civilians that are caught in between warring powers or powers in a tenuous ceasefire, whatever it may be. I feel bad for the innocent folks caught in the middle. And we are seeing a pretty chunky move higher here just ahead of the open. We're about 15 minutes away. And it looks like one of the Fed speakers has just started speaking here as well. That move now being retraced pretty quickly. Now I'm going to bring up some other charts real quick while we wait for the market to open. Just have a little fun with this. This is a motive wave chart with some of my pivot levels. We can see we're above all those major pivots. So we're in somewhat uncharted territory here. It's largely constructive. I would get a lot more concerned if we started to break below any of these levels. So that's something to take into consideration. Now I'm going to zoom in. And we can see here we've got the S&P 500 pre-market. And we can see we have got some support down below at this pivot. It's a confluence area between 6113.25. That is a pivot driven by price action and volume profile and order flow in the S&P 500 futures. And then we have confluence with this 6112.25 key plus 3 plus pivot. This is driven by options positioning in the SPX cash index. So this is likely to be a pretty chunky area of support to watch. If we get some downside, I'd be very curious to see how we react there. And then on the upside, we do have some potential resistance overhead at 6127.25 and then 6131.25. And Fed's Hammock saying he doesn't see any imminent case to cut interest rates. So we've had a kind of back and forth. Waller was saying he was favoring rate cuts. I believe Bowman was saying similar. Daly pushed back, and now Hammock is pushing back. And I think Powell pushed back as well with some of the notes that he released ahead of his congressional testimony that's scheduled. Trump also attacked Powell overnight, calling him too late, Powell, and going on a whole rant about how he needs to cut rates to help the United States government save money on its debt. So that's something to just keep in the back of our mind. You've got the market's pricing in about 2 rate cuts. And it is likely we have at least one this year. I think September would probably be the earliest we could reasonably expect it. We've got a late July Fed meeting, then August is Jackson Hole. So I think September is really the first meeting that's going to be live. And so I could see a cut in September and then maybe another one in December this year. And that assumes that data continues to go in the right direction, showing stable inflation at a lower rate of change and some further deterioration in the labor market. The Fed really does want to see that. They have this sort of dual mandate, maximum employment, stable prices. Now, the latter is a bit of a joke. If you look at cumulative inflation over time, you'll see it really has appreciated markedly. So even though the rate of change has stabilized, prices remain very high. And so it's somewhat dishonest to say, oh, inflation's under control if we're looking at it cumulatively. But on the other side of it, policymakers just look at the rate of change. So we, as market participants, need to appreciate that. That's all the Fed's looking for. They're not really concerned about what your grocery bill or power bill is or any of that. They're just looking at the rate of change in a basket of different things that people purchase. They tend to focus on core PCE, looking for that to level out to around 2% per year. So we're going to go back into Bookmap here. We do see just a little bit more aggression on the volume side coming in, particularly from buyers as we approach the market open, just about 10 minutes away here. And RS says in one of the YouTubes that I'm streaming to so many different places right now, so I do have to kind of go through and parse all the chats that these places have. I'm on 2 YouTubes, Twitter, Discord, Kick, Twitch, Substack. So there's like a lot going on. So if I take a little time to get to your question or if I miss it, that's why. So RS says, hey, here's an idea for Trump. If we are spending too much money on interest on U.S. debt, how about reducing the debt? Yeah, I think that at least reducing the deficit would be a good idea. I don't know that we can reduce the debt itself because, that involves paying it down, and we don't even have the excess of capital to pay all of our budget, let alone the debt. So I think we should reduce spending. And there was some interest in doing that until we started to have to confront the tough decisions involved with actually cutting spending, which, involves a lot of unpleasantness. And the one of the largest areas of spending is our defense budget, and a lot of that money doesn't get accounted for. So there's probably hundreds of billions of dollars that could be saved there if we were a little more rigorous about auditing the spending of just the DoD. There's a lot of low-hanging fruit, and it's a shame that initiatives to sort of thoughtfully shrink the government really just came down to partisan nonsense, and very little was cut. And Sam S. in the chat says, why do I feel more money printing is already happening? So it is, but it's not from the Fed. It's really about fiscal dominance. The government has a huge deficit. And when they have a huge deficit, that grows the money supply. And when the money supply grows, it's generally debasing the purchasing power of that same money. So there is still a form of money printing going on in the sense that money supply expansion is underway. And we've seen this really take off since mid 2022 as we face down a technical recession. The Biden administration took the time to create 2 big, enormous spending bills that ramped up our deficit and more than offset the Fed's tightening cycle and any potential for a healthy reset in the economy. This was just before midterms, and apparently there was just no appetite for anything even vaguely resembling a recession, despite it being a healthy part of the economic cycle. It's now somehow unpalatable in this 2-year political cycle. So we are still printing money ostensibly through fiscal dominance in the form of growing of the money supply. And yes, military interventions cost a lot of money, and our military budget is the biggest of any country. It's actually bigger than, like, I'm pretty sure it's bigger than all of Europe combined, our defense budget. If not, it's pretty darn close. Hey, Ash Gray, welcome to the stream. Just about 6 minutes away from the market open here. And let's take a quick look at the futures heat map here just ahead of the market open. So here we have it from FinViz. It's a great way to kind of visualize all this stuff. And I'm using the Zen browser, just a shout out to the Zen browser as an alternative to Chrome and Firefox. It is based on Firefox, but it's a really cool interface. I like having the tabs, the way they organize it, the aesthetic. It's all pretty neat. So, it's an open source free project, something worth checking out if you're into that sort of stuff. This morning, we have a decent bid across equity indices led by the NASDAQ, followed by the S&P, Russell, Dow. We've got the European stock indices really looking pretty robust this morning as well, especially the DAX up about 1.68%. VIX coming down, of course, with volatility no longer a concern with the idea of this tenuous ceasefire taking hold, down about 5% on VIX. Gold down close to 2%. Silver down just about 0.8%. Platinum continuing to be bid. Pretty powerful rally there. And copper also starting to look like it's ready to make a more decisive move higher. Crude overnight continuing to get crushed. We talked about some of the pivots to watch here. 65.05 is the level I'm going to be watching on crude pretty closely. I think it could offer us some support. And then we also have crypto really taking off this morning, from the lows. So looking at this for Bitcoin, for example, you could see as soon as there is an idea of, and I got to zoom out a little bit more to see this, as soon as there is an idea that there is going to be some kind of cessation of the hostilities, or at least that the worst was over for now, it really ramped off those lows by about $5,000, and it's held those gains pretty well. So I'm just going to make a quick adjustment to a setting here. Give me a second. There we go. And looking at a chart of gold here, let's just zoom out for the overnight session. And we can see that overall gold is continuing to see weakness. So as soon as we started to see some idea that the hostilities could simmer for a bit, gold started to lose its bid. But now that we've heard more and more that there's likely to be a sustained pause in hostilities, gold has come off of its earlier highs. I don't think the story in gold is over yet. This is healthy consolidation, if not even a corrective impulse. But gold has been largely driven by broader uncertainty than just what's happening in geopolitics. And I do think that by and large, is set to continue as we go on throughout the year. Tom observing there's less delay on kick. Yeah, YouTube puts a lot of buffering in. I've done everything to lower the latency, but they have their own thoughts on that. Let's check on the NASDAQ futures here. And just a pretty powerful ramp from overnight and into, you can even go back to yesterday's close here, and you can see there was a lot of back and forth between significant order flow, a lot of absorption attempts by both buyers and sellers. But overall, buyers prevailed. And as we had that announcement into the Globex Open, we saw a further ramp higher, and we've just been able to sort of levitate from there and hold those gains overnight by and large. Just about 1 minute away from the market open. And so my thought is ahead of today that a fair amount of the reaction function may have already occurred here in terms of the positive news. So we may have more of a consolidation day. We may even risk a bit of a fade here if there's any headlines that suggest that this tenuous ceasefire is not holding. I call it tenuous because these things don't often last. And we've already seen signs that it is becoming a bit strained. Now, Iran's president is saying we will respect the ceasefire if Israel does too. So hopefully, for everyone's sake, that ends up being the case. And markets are open here. So just watching the small caps open here, already getting a little bit of a sell off the open there. Got some alerts on that in the audio, so that's why I was looking at that one. S&P, somewhat of a similar look here, but buyers are starting to step in and get a little bit more aggressive. You can see that with that large green delta bubble. And we talked about it a little bit pre-stream, but we do have some support levels, or pre-open, I guess I could say. We do have some support levels implied by options down here that could give us just a little bit of support if we do see that downside. Gamma 1 likely to be a magnet as well. So if we get down to Gamma 1, we could get stuck there. Now let's view this through the lens of some of these pivots as well. Give me a moment. And so this was the thing that I was talking about with key 3. You've got this confluence area down here. We've tested it multiple times. It's held so far, but the more you knock on that, the weaker it does become as a support level. Nevertheless, that confluence between the pivot at 6113.25 and the key 3 plus level at 6112.25 is worth watching. If we do give that up, I'd be more inclined to look for shorts in today's price action. We're already below the BGL. For those not familiar, the BGL is simply the big green line or a 21 EMA on a 5-minute chart. It's a great intraday momentum indicator. I do have a question. As XAU USD is decentralized, in which order book is the buyer and seller heat map on? I'm looking at gold futures on the CME. That is a pretty liquid place where gold trades overall. I believe it's the August contract. And folks, while you're watching, if you have any questions for me about what you're seeing or anything else on your mind, feel free to weigh in the chats. I am regularly checking in. And I'm happy to bring up any other instruments that you all might want to check on. We're going to quickly check on Bitcoin here. Bitcoin, like we talked about, it had been holding pretty steady after that big ramp up, but now we are seeing some selling pressure off the open, taking price below the point of control. Earlier, buyers had absorbed sellers pretty aggressively. That's actually part of what had pulled the point of control lower, was all that selling. But buyers had stepped in. We got a bounce off that. We held above the point of control, but now sellers are becoming more aggressive, bringing us below that key psychological 105,000 level and seeing some continuation lower as they become more aggressive here. Ash, so heat maps combined with looking at other things like price action or creating pivots, I think that is really helpful for intraday. So for real short-term stuff, whether it's scalping or, identifying intraday trends, I do believe Bookmap adds a lot of value, at least for my process. I know we're all wired differently, but for my process and the way I look at things, it's helpful. I've even built tools that I layer on top of Bookmap to add some additional systematic approach to the way that I try to trade these things. So in a nutshell, yes, I find it quite helpful for intraday trading. And then I've got a question: is 61.35 a major resistance level? I have major resistance at 6152.25. That's the call wall at S&P 6100 in cash. I have lesser resistance at 6127.25 and 6135.25. So hopefully that helps. And I'll just quickly pull up what I'm talking about here so there's something to augment my words visually, because I know some folks are more visual. So here's our call wall. That's the major resistance. This is an SPX level translated to ES using my SPX options visualizer. So this is a really big level overhead. It's likely to be formidable resistance. Then we've got a pivot at 6131.25. That's also likely to be resistance, more intermediate resistance. And then we've got an options implied level of resistance at 6127.25. And we do see the pressure in Bitcoin continuing here. There was an aggressive trade there that just fired off as well. Let's check back in on the markets here. We're going to move over to the SPY because I know some folks trade the ETF in lieu of the futures. We do have a call wall on SPY to watch over here at 605 as well. And there is some confluence with that call wall and a large offer overhead. So worth watching. It also is confluent with the point of control. So you could say 605 on SPY, kind of a big deal level. There's also a pretty aggressive buy delta from earlier there on the session volume profile. So I'd say, if you're looking for a pivot in SPY today, 605 is a good pivot to look for rejections to be bearish to short from, and a break above to look for longs from. Probably at least all the way up to 606 if we break above 605. So someone's asked for a chart of Oscar and whether it's a I don't just do buy or sell. It's buy, sell, or hold to be practical about something like this. And if you don't have it, hold means not buying it. But let's take a look at Oscar's chart here. I'm going to bring it up on something a little longer term. This is Trend Spider. It's hard to want to short something that has this much positive momentum, but I will say it is starting to get into an area where prior upside impulses have failed. So this would be more of a hold for me. I don't see a reason to want to get long yet. It's right in a decision zone here, and so far looking like it's rejecting it. So that's a little concerning, but I don't also see a strong reason to want to lean into a short yet. We haven't had a confirmed rejection. It's only sort of in the initial phase of price discovery here. Look at this range here on this 1 week candle, and let's zoom in. So let's also take a look at the stats here. So about 12% of the float is short. So that's short interest of 21 million on a float of 180 million with average volume of 10 million. So a short squeeze on this thing could play out in 3 to 4 trading days. So this is not really a squeezy type of stock. It's just hard to not like this chart. I feel more bullish on it than bearish. So I don't necessarily personally want to get long here after the move it's had, but I wouldn't want to fade it either. I'd feel more inclined to lean long than short. So let me know if that helps. And we are seeing resistance on SPY at 605 here. That call wall. But we did see the offer. Looks like it was absorbed by buyers in that aggressive bubble. So that bubble shows buy delta was pretty darn big there. You're welcome, Jason. Yeah, I mean, I think that you've given yourself enough time. For option strategies, I typically tend to use calendar spreads and vertical spreads and diagonals to offset the debit and also to give me a little more flexibility if I feel like I need to roll the position. So if you haven't considered that for the way that you're approaching these things, it might be worth doing a little research. And sometimes you can find places in the term structure or just the overall distribution of volatility that let you get a better deal on the type of exposure you want to have. So that's probably something that deserves its own stream, kind of talking about option setups and spreads and things like that. But often is the case that I want to have a spread on rather than just a call or a put. So I got a question about, hey there, how do you take a scalp on gold? Please quickly walk us through your bookmap confluences stepwise. So I go through more than just bookmap, just so you know, when I'm looking at things like gold. And let me see if I can bring up my longer term chart here. I use bookmap for my intraday, but I'm also looking at longer term charts. So this is just a screenshot of my gold major pivots. And I shared the pivot levels when I was introducing the stream as well. And the idea of these pivots is essentially bullish above, bearish below. So my weekly pivot on gold is 33.75. Below 33.75 intraday, I'm more inclined to want to take shorts. So that's your initial area of decision making is, I'm looking at my pivots, which are programmatically generated based on order flow, based on positioning, based on volume as it's played out and the price action that's happened. And 33.75 is a pretty important area. As we can see, it's been decisive. So the fact that we're below it makes me want to take fades in the shiny stuff. And then on the other side of it, you look at what's happening with geopolitics. And of course, that tells us there's less concern in the present about an escalation. So that's a gold sort of, it's negative for gold. It's more risk on. Gold tends to be a little more risk off. But then the other thing that you see in gold here, and we'll zoom it out a little bit, it's a pretty clear micro trend structure of lower highs and lower lows. And this is pretty simple stuff. But if you see lower highs and lower lows playing out, you're in a downtrend intraday and on any time frame. So that's the other thing I'd be looking for is to fade those lower highs. Every single one has been giving traders an opportunity to fade them. You've also had a lot of aggressive selling. Look at this selling pressure right off the market open. That was pretty big for gold, for the GC contract. And then if you zoom out further, guess what? Bigger downtrend. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Bit of consolidation, then lower lows. So that's the other thing that you really want to look for is that trend structure. Now, when we're zooming back in, looking at exits and entries and things like that, you can look at the heat map itself specifically to get a sense as to where there's interest. Right now, there's a reasonable amount of interest at 3,300. You got 71 contracts on the bid there. Now it's, just about 71 contracts on the bid there. So that would be a reasonable place if you had been fading this move to look at taking a little bit off based on where interest is being expressed. And if you zoom out more, you can see there's really not a lot else going on that same heat map. So if I was looking for an area to cover gold after scalping this thing, I'd be looking at 3,300 as that first place to maybe take 2/3 of the position off. And the rest I'd likely let run with momentum. Some folks call those runners. Love them or hate them, runners can be a productive way to manage your trades so you're not getting in and out all at once. Typically, I prefer to scale into trades as well, using 2 or 3 entries. So Wasim, let me know if that's helpful. Thanks, Jason. Yeah, I'll think about doing that sometime. Stream on option setups. Do you see some mild iceberging in gold? So there's a little bit of tepid buying around the margins here off the lows. And there's a little bit of stopping out happening to the downside. These are those cumulative measures of icebergs and stops on the bottom. Now we're going to just quickly switch back to the S&P futures. Got a little bit of a bounce. And it was just around those levels we were talking about. We talked about that confluent area of potential support around 61.13, 61.12. We've got to move from just around that level higher. And we're now grinding against key 2 plus here with a pretty chunky offer overhead at 61.35. So it looks like buyers are trying to take control of the tape here in the S&P, probably give us a push back up into that offer area, and then we'll get a chance to see how this auction is playing out. If you think of the market as a three-way auction, this would be the part where you get a sense as to whether the buyers have the demand to take out that supply. If they do, the auction should continue to push us higher. And that's really what the heat map is all about, by the way. It's really about visualizing that auction and then confirming where there's these key points of interest and how price reacts to them. Because you get a sense as to who really has control. For example, if you get up into one of these larger areas of offered liquidity and price rejects there, that's telling you buyers don't have the demand and you may see a reversal play out. So that's another reason that heat map can be helpful. And we're starting to push above key 2, and you may recall we do have a pivot to watch here. I'm going to just pull up this other chart for the S&P. I've got a lot of these on this system here. So here we are, grinding up again against really 6131.25. We're very close to it. That's the next level of intermediate resistance to watch. And then really from there, it's pretty much blue skies up to 6152.25. If we make a big push above 6131.25, we could have a decent move higher from here. And we're starting to see some of the options flow coming in as well. So going to be worth watching that, see the distribution between the puts and calls from the SPX options visualizer. And you guys can learn more about that if you're interested. Traderade.com/SPX. It's an add-on for Bookmap and MotiveWave I created. And there's more coming too for the NASDAQ futures and ETF, the SPY ETF, IWM, and then eventually all the Mag 7. And you can see there's some confluence here between this large offer of liquidity and that pivot as well. So the market kind of looking at that as a decision zone as well. Adam, the size of the delta bubbles indicates which party was more aggressive with volume. There are differentials between volume of buyers and sellers. So big green ball means large amounts of buyers coming in, overwhelming sellers. It's not as much a passive order. Passive orders are going to be icebergs. So icebergs are identified differently. You've got them on the subchart. I also have a visual indicator for unusually large icebergs and stops. None of those have fired off yet. So hopefully that is helpful. So starting to see some of those options flows coming in. The most active call strike just around that call wall area. So that's 6,100 SPX. So there are some larger buyers out there wanting to try to push this thing higher. Let's see where the puts are, though. So we are seeing the hot put as the most active strike on the chain right now. And these will move around a bit as the day gets started. Now we just got another update. Hot call now 2-1 versus hot put. So that is looking pretty darn constructive that we could test that call wall if that flow continues. And we do see some confluence with an offer forming up here around that hot call and the call wall. So other folks in the markets are seeing what my tools and what Bookmap are seeing as well. And a bit of a rejection. It's telling you buyers are getting a little shy as we're getting into these areas of larger offer zones for liquidity. So we may need to consolidate a little bit, regroup, and then see if those flows provide a path to push us higher. The more calls that are being bought, the more dealers that are hedging delta by buying S&P futures. So it's something to keep an eye on. That's one of the reasons those flows are so important to watch. The S&P index, the options that trade on it trade about 1.2 trillion of notional every day. The S&P futures itself closer to about 300-400 billion of notional a day. So the options really are the dominant force. And over half of that trading in SPX options is 0-day. And about 75 to 80%, depending on the week, are options that expire about a week out. So it's pretty incredible. It's lots of short dated trading. And us retail folks, we're dominating those flows. We are the bigger component of SPX trading now. It's pretty incredible. And Powell's testimony is set to start in just about 8 minutes here. So when we switch off from this stream, I will likely stream that coverage. Just as a heads up. And that'll just be on Twitter. I won't have that on all the other streams, but I likely will stream Powell's testimony because why not? Could be interesting. There's always some spicy interactions. We also get to learn just how inept our legislators are about what the Fed does, asking the Fed as if he's like a consultant from Accenture how to run the government's budget. It's crazy stuff every time. It really is. But at least, it makes for some good material to watch with some popcorn beside you. So we do see call flows continuing to build up here. That plus by the 3K indicating that is the most active strike on the chain. And we just saw the warm call roll up as well. So you see a lot of interest in higher prices here. So we may consolidate for a bit, but it's looking more and more with these flows that the path of least resistance may indeed be higher. And one of the things I left as the market prep note for our Traderade members was this week expect range expansion and a two-sided trading week with a move higher followed potentially later by a move lower. And I'm thinking that is what's playing out. We may get all the way up to that call wall. And at that point, I'd be much more interested to see how things react because that would be a pretty decent place risk reward to see a reversal and follow it lower. And I also think there are folks probably kind of sitting on their hands right now, waiting for the testimony to start before doing too much, just because it is a bit of an event volatility catalyst, although I don't think we're going to hear much that is new or interesting there. We also have CB consumer confidence coming up at 10 a.m. in just about 5 minutes. Forecast for 99.8, prior reading of 98. And this number can move the markets, but mostly if it is a deviation that is unexpected or if there's some other details in the data that shock or surprise participants. Then we have a whole litany of different central bank speakers coming up. ECB Lane at 10:15, Fed Williams at 12:30, Fed's Collins at 2 p.m., Fed's Barr at 4 p.m. Just I wish we could just put them all back in their box, just have the blackout period be all the time, because it's just a bit much to parse all these different views from all these central bankers. Largely, their views don't matter. They typically fall into line with whomever the chairman is and whatever they want. But nothing about the way the market's consolidating here is making me think this is the moment to fade. I'd need to see a real break. And I'd like to see that break below 6113.25 and 6111.50 now to confirm that we've got room lower. So if we do make a determined push below that key 3 level and the pivot just below it or just above it, that would have me looking for fades. Right now, it's still sort of a sideways chop with call flow continuing to build at SPX 6100. And just saw a bit of an exhaustion print in the NASDAQ on this move higher. Buyers got a little bit aggressive. You can see that row of vertical circles there. So that is something to watch. Buyers got a little ahead of themselves on that move, and now we're starting to see sellers come in and take advantage of that exhaustion. This is why that exhaustion indicator can be pretty helpful. It can offer an opportunity for a quick scalp, but often at the very least, it gives you a sense that one side got a little ahead of themselves. And folks, if you want to learn more about my work, visit Traderade.com. Got a great community. Also have the SPX options visualizer and other tools. The visualizer and some of the tools that I'm building to complement it are available for Bookmap and MotiveWave. If you'd like to check out Bookmap, visit Traderade.com/bookmap and scroll down to the specials for a 40% discount on your first billing period. And I want to thank everyone for tuning in to this week's episode of Back to the Futures with me, Markets and Mayhem. It is always a lot of fun. I appreciate the interactions and the Q&A, and I hope you guys have an awesome week ahead. Stay tuned on Twitter for Powell's testimony coming right up. And as we close out here, look, we're challenging that pivot level, the 6113.25. Worth watching that level and the key 3+ level below. If we do take those out, we could get some continuation to the downside, leaving the opportunity for some short scalps. So far, we're seeing a bit of a bounce from those levels as we have in the overnight session, but worth watching. And now we're going to switch over to that testimony. We also got, before I go, consumer confidence. This has to be an error. I feel like I'm getting an erroneous print. It says actual 5.4 versus a forecast of 99.8. I'm going to check a second source because that makes no sense at all. Why would consumer confidence drop that appreciably? No, the real print is 93. There was an error on Financial Juice. The real print for consumer confidence is 93, which is still a miss. It's still not great, but it's not a 5.4. All right, stay tuned for the testimony, folks.